Well, thank you, everyone. I'm lucky enough to be right in between IM Gold and Barrick. That's why I get a full house. So now that I have your attention, we'll talk about Monarch Gold, which derives its name from the monarch butterfly, which is an endangered species, and I hope it doesn't talk too much about the industry itself. So without any further ado, let's start the presentation. Why would you want to invest in Monarch? We have the goal of becoming a 100 to 200,000 ounces a year gold producer. Our main asset is the Wasa Mac Gold Project, which has very robust numbers. It's located in one of the best prime real estate in Canada, in the Abitibi-Cadillac Fault. This region in Canada produced more than 125 million ounces of gold in the last century. So this is, as they say in real estate, location, location, location. You want to be at the right place to own some properties. And we own a vast package of gold properties in that sector. We've been generating cash flow with the custom milling operation. We own the Camflow mill. It's been working for us for the last 18 months. This is one of the original mill bought by Barrick at the beginning of its business back in the early 80s, and it was sold to our predecessor in 1993. We continue drilling on most of our property to try to add value creation to all the properties that we own, which I'll be talking very shortly. We have a solid position as a small producer, $5 million in cash, about $2.1 million in investment, and more than close to 1,000 ounces in inventory. Our main shareholders are Rob McEwen, Alamos Gold, 18% of the corporation. Greg Chemeny was the past chairman of Richemont. We have several Quebec funds, including Agnico Eagle, since we've issued shares to them as we acquire properties from them. This is a pie chart reflecting what I told you about the main shareholders of Monarch. Between 10 individual controlling funds or shares in the company, we control about 60% of the shares outstanding. This is a map that talks a lot. Just to give you an idea what this map represents, this is every properties that we own are in yellow. They represent a total package of 300 square kilometers, like I said earlier, in one of the prime real estate for gold development in Canada. You could see on this map, we have two blue squares in the middle, which represent the two mills that we currently own. The Camflow mill, which is currently operating, and on the right-hand side, the Beacon mill, which is fully permitted, ready to go. The importance of having a mill fully permitted and ready to go, just to give you an idea, it could take 3 to 5 years to get a mill permitted in Quebec, Canada. So you want to have some of the infrastructure in place when this market turns around. If you look at the extreme right, you could see the Quannar gold deposit. This is the main reason why Rob McEwen became an investor in Monarch. It's basically a package, a land package of 150 square kilometer, and right in the middle of it, we have a fully permitted mine ready to go. We're seeking $35 million Canadian to get this gold project going. It's about a 5-year mine life right now at the tune of 30 to 40,000 ounces a year. We have the mill capacity to treat all the ore coming from that project. But the main reason why Rob McEwen invested in Monarch was because of that property, and he believed in the exploration potential since we were the sole land owner in 150 square kilometers in that region. If you look at the top part, you could see the Swanson property, and right under the Mackenzie property, Mackenzie Break. Those are two properties we've acquired from Agnico Eagle. They both have a open pitable reserve and resource that can actually be brought into some of our mills in the future. But last but not least, on the extreme left of this map is the Wasa Mac Project. This is our main project. It's 2.6 million ounces, and it's within 10 kilometers from one of the biggest mining towns in Quebec, Rouyn-Noranda. And most of the miners in that town right now are doing fly-in, fly-out in every part of the country, and all they desire is a local project to start so they can go home to their wife at night. So it is a very good spot to be. We are sitting on the Trans-Canada Highway, literally 100 meters from the highway. And we are also sitting in front of the railway system that leads from Quebec to Ontario. I will show you that in a second. So if you look at the Wasa Mac project, these are the numbers that we came out at a feasibility level in December of 2018. Now, it is important to understand that on the map that I previously showing the whole, this is the Cadillac Fault going from one end to the other. The Wasa Mac project is the only pure gold multi-million ounces deposit at feasibility stage. It's very important to understand this part because the Cadillac Fault right now is either being mined out by some of the big miners at different properties, not been discovered yet, but at feasibility stage, we're the prime candidate in the Cadillac Fault. So just to give you an idea of the numbers, this is an underground mine. You could see the picture on the right-hand side that shows you the mining plan. This is a mine that would have an output of 142,000 ounces a year for 11 years with a payback of 3.9 years, 6 years. We're talking about a return of 23.6% IRR, 522 million NPV, and a low cost of production of $550 per ounces. And all-in sustaining cost of $630. Now, the part that is very important to understand is there's plenty of mills in the area. The current capex of this project with this kind of return needs $464 million to go. 230 million of that is the milling facility and the tailing ponds facility. So if you look at this project, which sits 100 meters from the railway, if you start taking your ore to any of the mills in the area, and I'll show you a map in a few seconds, you will understand that this project at feasibility level all of a sudden can really kick in some good numbers on the return. And we are presently in a data room. We've opened a data room with some of the mill owners and different potential investors. So just to give you an idea of the comparison model that we use for the Wasa Mac project, we have the first one is Goldex, similar project, 5,000 tons per day, 120,000 ounces a year, basically at an OPEX of $41 per ton underground. They're mining 1.82 grams per ton underground, but they're doing it in very big quantities. A secondary project, it would be the Alamos Gold, Young and Davidson. They produce 8,000 tons per day at a tune of 180,000 ounces a year. So if you look at Wasa Mac, we're talking about a project that fits right there in the middle. It's a grade of 2.7 grams per ton. Now, bear in mind, those are vast, disseminated area that we are mining. This is not the narrow, high-grade vein that you see in most of the Cadillac break. If you look at the map here, you could see the red dots on the map are on the east part, the two mills that we currently own, and the one in the middle is the Wasa Mac deposit. All the blue dots that you see on this map are all the mills in the area with, to some degree, excess capacity that could take on 6,000 tons per day of the Wasa Mac project. It is very imperative that people, when they look at this project, that understand that going to another mill will save a very big amount of capex. And this is why we published that map back in the spring of 2018 before going in full feasibility. And we did the whole feasibility with our own mill in order to be in a better situation looking at other milling situation in the region. The Ontario Northland Railway is the company that serves all Ontario on the railway system, and it goes in front of Wasa Mac and it ends its route in Rouyn-Noranda. So we are plugged into the Ontario railway system, which offers many big mills, including the Gold Corp Newmont Dome Mill, the Rob McEwen Black Fox Mill, and also the Kidd Creek zinc mill, but it's a very good mill because it's already attached to the railway system. On the Quebec side, you have the usual player, IAMGOLD, presenting before me as the Westwood Mill not far from the project. You got the Canadian Malartic joint venture of Yamana and Agnico, which sits a little bit further east. And you also have the Eldorado Gold people in Val-d'Or with milling capacity. Now, the railway system goes through all these milling facility, including our own milling facility at Camflo, which unfortunately is too small to get the Wasa Mac project treated at 6,000 tons per day. So this is a picture, a longitudinal section of the Wasa Mac deposit. It gives you an idea of its form. You could see a mined out area that was done back in 65, 70. So that gives us a very good understanding of the metallurgy and a lot of the things that were done in the past. If you look on the left-hand side, you will see some of the most interesting cut through drilling. I like to show those because some of those are the best ones at 6 grams per ton over 50 meters, 2.8 grams per ton over 71 meters. These are numbers that you can mine in a big bulk scenario that we're looking at for the Wasa Mac deposit. So you could see on the resource level, it's 2.6 million ounces or 29 million tons at 2.7 grams per ton. It is open at depth. It's important to understand that in Quebec, especially the Abitibi region, some of the mines go down to 3.5 kilometers at depth. We're looking at a project right now at feasibility level with 2.6 million ounces that is known all the way down to 800 meters. There's very much place for improvement, exploration, and nothing was done past that level. So we are hopeful that this deposit could go on for much more than 11 years stated in the feasibility study. Okay. So basically, I'll show you, I'm just going to go quickly through the next slides. These are cash flow generating mills that we own. We have a Monarch Gold deposit that I mentioned earlier, fully permitted mine, looking for a partner, $25 to $30 million US to get this mine started. The Beaufort mine is a smaller mine that we've acquired from Richemont. We produced about 25,000 ounces in the last year with this project. These are the resource estimate of the project we've acquired from Agnico Eagle. When you get to the exit, you'll have the presentation material from Monarch, and you could get at the end the total of ounces underground that Monarch has at the moment, which is 3.2 million ounces of measured and indicated in its portfolio. This is the valuation compared to our peers. We're trading at less than $15 per ounces underground, and our market cap is $50 million, which is greatly undervalued, as you know, and as you heard all morning about the industry. Basically, we're going to end on this. The catalyst coming, we just published a positive feasibility. We have a data room with multiple parties studying the Wasa Mac project for potential partnership as we speak. And we will continue drilling for the next year, improving the economics of all the different projects that we have at different stage of the pipeline. And our goal is to become 100 to 200,000 ounces a year gold producer. Thank you for your attention. Have a good day.